Hey, my name's Jeff Nicholson and welcome to my YouTube channel. In this video, I want to talk about the Federal Reserve and their cut in interest rates this week. Why it's not actually as good news as it might sound. You see, they've revised their forecasts drastically for 2025. This will have an impact on UK house prices, mortgages, and much, much more because we're so intertwined as countries. It's a global economy now, and if the biggest country in the world is revising their forecast, then we need to pay attention to what they're saying. So in this video, I'm going to tell you how much did they cut by, what impact it has, how many times are they going to cut next year? We've got that information as well. And why has this all changed? Well, I can give you a little hint. It's something that happened on November the 5th of this year. So before we jump into that, if you haven't done it already, do subscribe to the channel over there and hit the bell notification. Why should you subscribe? Well, we have new property content on house prices, on mortgage rates, on investing in property every single day. So that's a reason to subscribe. And let's get some more views on this video by smashing like, tickling like, doing something to that like button. That really helps with the YouTube algorithm. And I appreciate everyone that takes a moment to do that. So do that right now. So, what is going on? Well, the Federal Reserve have cut rates. That's good. Happy, positive. But how much did they cut? Well, they took their rate from 4.5% to 4.25%. So a quarter of a percentage down. That's good. That's going to help people that are on tracker mortgages. I don't know actually if they have those in America. I'm sure they have something very, very similar to that. But yeah, it does mean that lending costs should start to come down for people. That's positive. But there was a lot of messages. You see, I stayed up and I watched the press conference after this Federal Reserve meeting. And there's a lot of stuff that you can figure out what they're trying to say without them directly saying it. You see, they can't come out and say, we disagree with the government totally. We think the course that we're going to end up on is totally wrong. So they have to dance around the words. But the journalists get the right questions in, they push and probe, and we can get our own analysis on what they're thinking. So we're going to talk about that in this video. So the expectations were that next year, 2025, that they would have four cuts. So basically every quarter that they would have a cut. They have come out now and said that won't be happening. And so they've revised that figure. So we won't be having four, we will be having two. So we're obviously in the UK. Do we need to worry about that? What's happening in America? It's so far away. Well, we do, because normally the Bank of England will keep their interest rate close to what the Federal Reserve does. However, there's a reason why we might not need to panic so much. So the Bank of England, so what's our interest rate? Ours is at 4.75, right? So that's USA, UK. We're at 4.75%. Now, the Bank of England have been coming out and saying, we are going to cut 4 times. They can still do that with the Federal Reserve cutting twice. Now, here's why. The reason is we're already half a percentage point away from them already. So if we did 4 cuts of 0.75%, we could then match or be very close to where the Federal Reserve is anyway. The importance of keeping these rates close to each other is because what happened yesterday was when the Federal Reserve came out and said, we're only going to cut twice instead of 4 times, the dollar actually gets stronger in that scenario. So the dollar has got stronger, so they've got more buying power, but there are downsides from that as well. So you don't want your currency fluctuating greatly and wildly. And so that means that we can keep our cuts similar to theirs and our interest rates will be fairly similar. So the news was that they're not going to cut rates so often, and the markets didn't react well to that. If you looked at the stock markets yesterday, and if you've looked at the British stock market today, it isn't great news. The American stock market has rebounded a smidge, but it hasn't come back to where it was yesterday. It started to go down. They're not really liking what they're being told. So what is the problem at the moment? Well, it's the threat of tariffs that worries everybody at the moment. And so this was a big thing in the election. The election in America was mostly won because of the economy. Like, it was the economy, the inflation, stuff like that. People just wanted change. They feel poorer than they did 4 years ago. And so that was a very hard obstacle for Biden or Harris to overcome. And people felt that they had more money in the times of Donald Trump, regardless of whether they felt he was a good man. Now, he's saying that when he's in power, he's going to put a 25% tariff on Mexico and a 25% tariff on Canada immediately. Now, what that will do, it's a tax. And not everyone understood this around the election. And so what will happen is, if you buy something from Canada for $100, then when that arrives in the country, the importer, no one in Canada will be paying this, the importer will be paying 25% tax, meaning that item that cost $100 has now cost them $125. Now, they obviously are going to pass that on to the person that they sell it to. So maybe they're the wholesaler, they send it to other retailers or the consumer. The costs are going to go up by at least 25%. Like, that's a given. So that's going to cause more inflation. And the Federal Reserve yesterday went through all of their forecasts, and they're expecting inflation now to go back up to nearly 3%. And here's where it gets even worse. They're expecting that to last until 2027. They were nearly dealt with all their inflation, and this will push that back up. Now, the elections were on the economy, but also the border. And so this is Trump's negotiating tactic to try and get stronger borders. And so maybe the public won't mind paying those extra prices if it gives them the security at the border, which is what they wanted as well. So the tariffs are a major obstacle that the Fed has got to overcome. And that's why you're not going to see interest rates coming down at the rate that they were predicted to come down only a month ago. That has changed so dramatically, so quickly, and the markets aren't liking it at the moment. So what will happen is we will see over the next few months, if these tariffs are not put on, then this could all change again. If Trump doesn't put these huge tariffs on, or they're not as impactful as people felt, then potentially we could go back to having more interest rate cuts. But it shows how quickly things change. However, the only message, or the most important message I want to get across to you guys from this, is that even if the Americans cut twice, we still have the ability to do our 4 interest rate cuts that the Bank of England are saying we're going to have in 2025. So that's positive from our side. Let me know, do you think that the Federal Reserve, the American economy, will impact our house prices, mortgage rates? What do you think on that? Do comment below. Do smash like, do subscribe. Check out all the other content on my channel, including this video right here.